These are 10 high-growth software stocks that just turned profitable this year. We'll look at these stocks from the biggest to the smallest to save those hidden gems until the end. Getting started with number 10, CrowdStrike. CrowdStrike trades as ticker CRWD. It's a cloud-native cybersecurity provider that secures the most critical areas of risks, including endpoints and cloud workloads, identity, and data. In the last 5 years, they've grown their sales at a 65% compounded annual growth rate. Their net income just became profitable in the first quarter of 2023, and it's stayed profitable since then. In the first quarter of 2024, they had net incomes of $53.7 million. CrowdStrike is a $73.3 billion company that trades just $15 below its 52-week high. Today, the stock is owned by just two super investors, with Chase Coleman of Tiger Global Capital Management having a 1.64% position in the company. CrowdStrike's up 3% in its most recent day of trading alone, and since its lows in 2020, it's up more than 10 times. It's still really being valued on its ability to grow, as right now it doesn't look like their profitability numbers are able to justify this even with some decent growth assumptions. The company needs to be able to sustain their past growth to make this number reasonable. There are still lofty growth assumptions embedded in their stock price, yet that hasn't stopped the business from more than tripling in the last year alone as they've reached profitability. The expectation is for this growth to continue well into the future. Credit for this list goes to the investment research platform FinChat. Remember, this video isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. Palantir Technologies, ticker symbol PLTR, is next on our list at number 9. The company offers 4 different products that help organizations effectively integrate and organize data at a huge scale. 53% of Palantir's sales come from government clients, and they've grown their sales at a 30% CAGR in the last 5 years. Fiscal 2023 was their first full year as a profitable business, and that's continued into 2024. Right now, Palantir is a $45 billion company that trades $5 below its 52-week highs. Today, there are no super investors in the business, although Daniel Lowe briefly had a position at the end of 2020. Palantir, like most of the rest of these companies, will need to sustain its growth well into the future to make today's prices reasonable. Still, a GF value comes in at under $17 per share. Like CrowdStrike, it looks like Palantir was pretty undervalued at that inflection point. Keep watching to see more companies that are at that inflection point, possibly right now. Nutanix, ticker symbol NTNX, is number 8 on our list. It's a hybrid cloud provider that helps customers with both their public and private cloud instances. Since 2017, the company's more than tripled their number of customers. This most recent quarter was their first time having positive earnings. In the last 5 years, they've grown their sales at a CAGR of 11% annually. Today, Nutanix is a $16.5 billion company that trades just $2 below its 52-week highs. Nutanix makes up just a marginal percentage of Lee Ainsley's Maverick Capital portfolio, though he did buy in the most recent quarter. This is another company that's rebounded recently. Since around the middle of 2022, its stock price has more than quadrupled. Still, it may be running out ahead of itself as a GF value comes in at $30 today. That's less than half of their current stock price. When we look at the rest of their chart, we can see the company's bounced around quite a bit in the last 5 years. DocuSign is number 7 on our list, and it trades under ticker symbol DOCU. The company offers e-signature and contract lifecycle software for businesses. Despite a rise in competition, DocuSign has continued to grow revenues thanks to the overall shift toward e-signatures. DocuSign first posted positive earnings at the beginning of 2023. In the last 5 years, to highlight this, they've grown their sales with a 31.5% CAGR. Today, no super investors own DocuSign stock, but there were a few, especially in 2020, who loaded up on the business. At one point in time, Stephen Mandel had nearly 4% of his fund in the company. Today, DocuSign is just under a $12 billion stock that trades $3.50 below its 52-week highs. DocuSign stock has come back round trip, and it's down 80% from its all-time highs that it hit back in 2021. Today, a GF value for the company comes in at around $71 per share. That's $12 above their current stock price, meaning DocuSign may be slightly undervalued. Monday.com is number 6 on our list. It trades under ticker symbol MNDY. Monday provides a centralized space for cross-team collaboration. Once ingrained in a company, it tends to spread quickly throughout the organization, basically as a team, work, and project software. In the last 5 years, they've grown their sales at an insane 74.7% CAGR. That is the fastest on our list so far. And with that high growth, Monday posted their first profits toward the end of 2023 in both the third and fourth quarters. Monday.com is owned by two super investors, and this includes a recent huge addition from Dennis Hong of Shaw Spring Partners. 12.64% of his U.S. portfolio is now invested in the company. Josh Tarasoff, who's an investor Monish Pabrai said to watch, also has a 5% position in the stock, though he's recently been trimming. Right now, Monday.com is an $8.9 billion business that trades in between its 52-week high and its low. From where it was first listed in 2020, the company's stock is around flat. From its highs in 2021, it's down nearly 60%. Still, that high amount of growth and their recent turn to profits puts decent expectations on the business. Their fair value is based on being able to sustain this, and that's why a GF value comes in at $223.50 per share. That's up $40 from their current stock price, saying Monday.com may be undervalued. Have you ever built a website? If so, maybe you've used number 5 on our list, Wix.com, ticker symbol WIX, Wix. Wix is a drop and drag website building platform that helps people set up and run businesses online. Over the last decade, they've stolen market share from the leader WordPress. They just earned profits in their last 2 quarters, and in the last 5 years, they've grown their sales at a 21% CAGR. Today, Wix is a $6.8 billion company that trades $15 below its 52-week highs. There are currently 3 super investors, 2 of which who have very big positions in the company, though they've all been trimming in the most recent quarter. Rob Vinall has nearly 16% of his U.S. portfolio in the business, and Pat Dorsey has 12% of his U.S. portfolio. Wix is another software stock that's come round trip. It's down more than 60% from its all-time highs that it hit back in 2021. Still though, the company is up more than 7 times from where it IPO'd back in 2013. Despite a recent rebound and their path toward profits, it looks like a GF value is around $28 below their current stock price, saying the business may be overvalued. Bill Holdings is number 4 on our list, and it trades under ticker symbol BILL. The company helps small, medium-sized businesses automate cash inflows and outflows. It primarily sells invoicing software, but it also earns interest from funds that are held in customer accounts. BILL just became profitable this year in the first quarter of 2024. In the last 5 years, they've grown sales at an insane 74.7% CAGR. That's exactly tied with Monday for being the highest on our list. No super investors own BILL today after Stephen Mandel exited his position at the end of 2023. He was the super investor with the most recent and biggest holding overall, having nearly 2.7% of his portfolio invested in the company. Today, BILL is a $6.1 billion stock that trades just $2 above its 52-week lows. That's a far cry from some other stocks so far that we've seen with similar momentum. Like these other companies, BILL was in bubble territory back in 2021. Since then, their stock price is down 83% from their all-time highs. Despite this recent change in fortune, it looks like BILL has the possibility to still be a value trap. At least that's the warning given from Guru Focus. Today, though, a GF value comes in at $194.50. That's up nearly 4 times from their current stock price, so this has the potential to be a deep value play. You just need to dig in and do more research on the company. At number 3 on our list, we have DigitalOcean, which trades under ticker symbol DOCN. Don't confuse that with DocuSign. DigitalOcean is a cloud vendor that provides infrastructure as a service for software developers. They have more than 600,000 individual customers and primarily cater to small and medium-sized businesses. The company's posted positive profits since the middle of 2023. Since then, these did spike up a bit, but they're trending down in the last 3 quarters. In the last 5 years, they've grown their sales at a 27.8% CAGR. Today, DigitalOcean is just under a $3 billion market cap, and it trades in between its 52-week high and low, although it's $12 below its 52-week high. This is a high-growth stock that really hasn't been owned by many super investors. In 2021, Chase Coleman briefly owned the company for a year. From its highs, DigitalOcean is still down 70%. With more recent consistent profits in the business, today they have a GF value of $60.50 per share. That's up $21 from their current stock price, even as they started to rebound at the end of 2023. The second smallest stock we're looking at today is Semrush. This trades as ticker symbol SEMR. Semrush helps companies run digital marketing campaigns. It has over 112,000 paying customers, and it generates more than $350 million in annual recurring revenue. They first posted profits in the middle of 2023, and they've been positive since then. In the last 5 years, they've grown their sales at a 34.3% CAGR. Semrush today is a $1.86 billion company that trades exactly at its 52-week high. The stock is owned by just one super investor, and that's Pat Dorsey, who has 4.85% of his US portfolio in the business. This is another stock that's been cut in half from its all-time highs back in 2021. Today, it looks like its GF value comes in right about its current stock price, so a recent run-up in its stock may have been warranted. If you want an even faster way to screen, check this out. Get investing research that actually works. Our process beats the market. It's backed by real portfolios and grounded in principles from value investors Warren Buffett and Peter Lynch. Our proprietary fair value tool quickly values companies to help you filter stocks. Join our exclusive investing community and submit requests tailored to your investing goals. They cost just $1.21 per day. That's less than a coffee. Yet this small investment in your financial future can lead to gains that translate to hundreds of thousands, if not millions of dollars more in your pocket. If you need a new investing tool and aren't using this, you're already paying for it. Start a 7-day free trial now. Number 1 is the smallest company we're looking at today, and it's the only stock priced at under $1 billion. It's Fiverr International, trading under ticker symbol FVRR. Fiverr is a marketplace that helps freelancers find work. In exchange for connecting businesses with freelancers, Fiverr takes a 20% cut on transactions across its platform. They first hit profits, like most of these other companies, back in the middle of 2023. Since then, they've sustained these, but they've come down in the most recent quarter at the beginning of 2024. In the last 5 years, Fiverr's grown their sales at a CAGR of 37%. That's very high growth for a company like this that just posted positive profits. Right now, Fiverr is an $866 billion stock that trades exactly in between its 52-week high and low. Today, the company's not owned by any super investors, but Lee Ainsley briefly had 2 small positions in the business between 2021 and 2022. As the smallest company on our list, Fiverr also has the distinction of having the biggest fall from grace. Their stock price is down 92% from its all-time highs of $330 a share that it hit at the beginning of 2021. Their profits declined in the most recent quarter, and that's why Guru Focus gives them a possible value trap warning. Still, a GF value comes in at around $38 per share, implying more than a 30% upside if they can sustain this growth into the future. All 10 of these were some high flyers and are still high growth stocks. Which was your favorite? Let me know in the comments below. If you want to learn about even more opportunities in the market, watch the next video and sign up for our investing tools to make requests, track more than 73 stocks, and get exclusive bonus coverage.